Good morning. It's January the 26th, 2018, and we have lots of news this morning that can shake up and move the markets, and it's option expiration for the February series of Treasury options. So we should have some pretty good intraday volatility and action. Hypothetical or simulated performance results have certain limitations, and like an actual performance record, simulated results do not represent actual trading. Also, since the trade's not been executed, the results may have under or overcompensated for the impact of any uncertain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Looking at the note, option expiration today has us at closing between 22.16 and 122 even. Right now we're kind of right in the middle of that. So a structural sell based on option expiration, you're getting short at 15 and a half, and you'd be buying 22 and a half or 22.01. First break in the market's up here at 9:10. We have a lot of news today. GDP 2.9 could come in higher than forecast. Deflator 2.3 probably about right. Durable orders plus 0.6, strong number. Ex-transportation plus 0.6. Core capital goods plus 0.5. That one could come in higher than forecast. International trade minus 69B. Retail inventories advance plus 0.1. Wholesale inventories advance plus 0.3. Baker Hughes rig count, don't know what it'll be this week, but last week it was 1261. And 936. Given the price of oil, these numbers can come in higher than forecast. The news focus: GDP, durable orders, ex-transportation, and for treasuries, perhaps the direction of the Emini. They've kind of separated right here. The Emini could make new highs today. Everything is set for them to retest the highs. So our first sell is going to be 9 to 13, 15 to 19 for sell 2. On the buy side, 1 to 5. We'll have to get it done against the buck because of option expiration, and 25 to 29, which would be new contract lows. I don't think we'll see that. Today's also a pause day. The auction is behind us. The cash markets are usually pretty quiet. All the demand for 2, 5, and 7-year paper is gone. Primary dealers are getting their books straight, getting the paper out to their various customers, adjusting their hedge positions, making sure everything is right. These guys go to sleep at night buttoned up. They don't spec on the cash side of the market. There is not a major firm out there that's involved in futures that has not almost gone bankrupt and would have gone bankrupt if they didn't have access to outside money that played the futures market by taking spec positions. So the cash side of the large firms, they're hedging. They price in the futures market or they price in the cash market, whichever one's more advantageous. And I remember Coke used to have 80,000 contracts on between products and crude oil, and I never saw them out of balance over 100 contracts at the end of the day. And then when they found out that they were imbalance, they would come in and access, which was the electronic market, the post-day session market, and put those positions on to make sure that they were buttoned up. Very, very aggressive. A lot of trading by that firm, but they did not take that exposure for good reason. Who wants to go out of business, right? Okay, the first area of resistance is going to be in this 8 to 12 area. So 15 to 19 will be sell 1. And I'll open it up a little bit, maybe get stops up here, 27 to 31 for sell 2. The play in options is they usually take it down or up off the opening, freeze the puts or calls, hold it up there an hour, hour and a half, 2 hours, then take it the other way and freeze the opposite side of the market. And that's how they maximize their profits as market makers. Their objective is to get as many options to expire worthless as possible. Okay, the buy right down here, buy 1, 21 to 25, buy 2, 13 to 17. Okay, 148. 16 to 150 is the option play in the 30-year. So a 31 sell and a 17 buy would be perfect based on option expiration. Gold recovered overnight. The dollar resumed its selling. Trump's comments yesterday afternoon took crude and gold lower, and they've since recovered. Pretty good resistance at 55 to 60. Pretty good support at 40 to 45 when you just look at the screen right here. Last rotate up stopped at 54. We're at 50, so we'll make 53, 55. Sell 1, come inside the overnight high. 58.60, sell 2, pick up that level right there. Top of value. On the buy side, I think we can go a little bit lower, but I think we'll probably find some buying here. So let's make 48.46, buy 1, and 42.44. Come inside that low right there, right above that low, buy 2. Looking at the euro, okay, we've got possibilities, or probably going to have fast markets on the GDP, durable orders news. So I've eliminated some charts, and we'll see if I've solved the problem on the other machine. Okay, 125 even right up here to. I changed the scaling on this to a nickel, so to get everything on the screen, to 10, sell 1. And 25 to 35, sell 2. On the buy side, 40 to 50, buy 1. And 15 to 25, buy 2. Play for a trading range market here today. Crude oil has come back with weakness in the dollar. And looks like we got a seller at 65.75 to 66. So basically trying to sell against the buck. And then 66 and a quarter, 66.50 for sell 2. The buy side down here, 65 even, 65.25. And a structural buy would be at 40, 42, limit buy right here, leaning against that high volume number. Then at 35 for profile players. So 42 to 35 would be a buy zone based on structure. I think we might be able to do it a little cheaper, but we'll see. And then 64.50 to 75 for buy 2. Don't think we'll have large swings in crude oil today. People are hesitant to go home short on the weekend in crude because of what can happen unless they can deliver in. Okay, the E-mini is poised to make new highs. We have big news today. The news could be the impetus behind that. The market has tended to make new highs on low news days. So I mean we've got resistance at 53 to 55, and it's okay to sell failure to take out and hold that. And the way you have to do it is just take the locals approach. Well, I'm short at 54.50, and if I paint a 55.50, I'm wrong. If 55 basically holds, then I got a shot to get back down to 45. So there's a lot of volume down here in the 40 area. You can see the move started up in the 45 last night. So 40 to 45 is pretty good support. A structural buy would have you long at 40.50 down here, leaning against all this volume that we have. A structural short would have you short at 54.75, 55, leaning against overhead resistance. Get through 55, 60 should be the next stop. So 59.61, sell 2. On the buy side, I had 46.48 buy 1, and 40.42 buy 2. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. Back with you as soon as possible. We'll back in 23 minutes. We'll see what the news is. Take it from there.